What's going on, guys? Welcome to the weekly technicals live session for December 3rd, 2018. And I just want to say thank you guys for being patient with me for being a little late on the upload of this video. Last night one of my friends was in town and he had a concert performance out in Venice Beach. So I went down there last night and I didn't get home till like 3 or 4 a.m. So I did not have time to make the analysis, so I just kind of slept in and decided to, have 4 analysis videos back to back, Monday through Thursday this week. So the daily technicals will be Tuesday, Wednesday, Thursday, just as normal. We'll just have, today's video, which will be the weekly technicals. So in today's video, I'm really just going to be going over, mainly like a daily and, kind of weekly perspective of what I'll be looking at in the charts. Not so much getting into like the intraday stuff. That's going to be, for the daily technicals Tuesday through Thursday. But aside from that, let's go ahead and jump into the technicals portion of this video. So looking at dollar index, we're still, relatively in a pretty tight consolidation in my opinion, and this is typical going into the end of the year. So this is why I don't typically trade as often. So you guys know, like last week I only called one signal, and that was due to the fact that that was the clearest setup to me, and we were able to net 50 pips profit on that as a minimum target. So that was enough for me for the week with the current state of the markets. So you don't want to really push the limits in the markets whenever they're not as clear, versus like maybe during like the fall or even the spring months, right? Typically during the end of the year and the summer months, you'll see more of a consolidation, and you can really see that unfolding here on the daily chart. Overall, I'm expecting continued higher prices because we do still have the liquidity resting above this 97. Let me actually mark this level out. 97.70. So just have this level on your charts, because in terms of an upside objective, this is what I'm going to be looking for as my first target. So basically, what that means is I'm just looking for dollar index to continue trading higher. I don't really want to see it trade any lower. Now we can continue consolidating, that's fine too. Basically the two plans or outlines that I have for the market, for this week especially, is it's going to remain either in a consolidation or we're going to start gaining some strength to get back above 97.70. So if we get back above 97.70, then my target will be the high that we have back here, which comes in at 97.90, roughly, 97.90 to 98 big figure. So that's what I'll be looking at, like in terms of a near-term perspective. And what you guys always have to remember too is, if you're zoomed in the charts like this, for example, you want to always zoom out, because you can always get that clearer perspective, right? Look at what we've got going on. Consolidation, market pushes away, consolidation, market pushes away. We're just in another consolidation. So we can continue trading higher. We're just in that consolidation phase of, this current market environment. So this is just a kind of like a rough drawing here, but you can see that in terms of what the market's doing, we're overall in a bullish trend, right? So we're still looking for price to continue trading higher unless the market comes down and makes a lower low. But if you look at what price action has been doing, price action repeats itself. So we've got a consolidation, then the market breaks out the consolidation and trades higher. Market goes into another consolidation, breaks out, trades higher, comes back into a consolidation. Market breaks out, forming a higher high, trading higher. Now we're back in another consolidation. Okay, so the next thing for this market to do would be break above this previous high, which is 97.70, and continue to trade higher. So whether or not we can, gain strength and start getting above 99s and things like that, that's really going to be dependent on, the speed in which they move out of the consolidation and get above 97.70. Because a scenario that could happen and that you always have to consider is the market could very well just run out the high and go back into consolidation. Meaning we could see the market run up above 97.70, take out any liquidity resting above here, and then reject that high and start trading lower. Now it doesn't even have to come back down and make a lower low. We can just go back into a consolidation. So we can just bounce back and forth in this area to close out the year. And, you know, one thing that I would encourage you guys to do just to kind of like see for yourselves is, you know, rather than me, you know, try to like preach it to you or anything, go back and look at, you know, December months in previous years trading and see what the market looked like. See, was it consolidating? Was it trending? You know, what was it doing? Was it like running liquidity and going back into consolidation? Was it trending hard, making, you know, continuous higher highs or lower lows? So that would be a good like practice of study, just to kind of go back and do some back testing on like December months and see what price action looked like, to kind of familiarize yourself and, you know, understand really what's going on in here right now, so you get a, you know, more of a context for the markets as a whole, right? You can sit here and try to battle back and forth with whether you should be a buyer or a seller, but, you know, it's really important to also understand like the context of the time period that you're, you know, working within. And right now, being December, holiday months, you know, people are spending their money, you know, in gifts and things like that, but they're also pulling money out of the market, right, to close out the year and any investments that they have, anything like that. Typically, money isn't being poured into the markets at this time of the year, right, in my opinion, and from what I've seen and, you know, the study that I've done in previous years. So that's something that I would recommend that you guys just kind of do on your own. And, you know, come back in the comments of this video and just kind of like share your results, or just send them to me on Instagram or something. But, you know, share those results with me. That way you can kind of have more of an understanding. And if you have any questions about it, you know, I can answer any questions that way too. But, you know, that kind of should give you guys a lot more of context behind this piece of price action, because, you know, the importance here is really to understand each time frame that you're working within in certain points of the year, right? So you can see back here in September, market formed a low and we started trending. Now, mid-November, we're just consolidating. We're unable to break out of this range. We've got a high and a low, and the market's unable to continue lower or continue higher. So until one of those things happens, we don't really have a clear direction on the market. So we have to go with what is the overall higher time frame trend. Well, it's clearly bullish, right? We've been continuing higher, right? And then we also have to note, where is resting liquidity above the market. We've got a high here, okay, at 97.90. Again to 98 big figure, and we've also got a high here at 97.70. So why would the market want to come all the way back down before running out the liquidity above the market? So to me, what it looks like is happening is they're just kind of winding up in here, you know, aka consolidating or ranging, until they actually have the move out. And again, we don't know whether or not that move is going to continue higher or they're going to reject and trade lower. We just have to see based on, you know, the type of price action that we have once we're at those levels. But based on, you know, what the market's been doing, we're either going to continue consolidating, or in my opinion, we're going to trade higher with that 97.70 up to 98 big figure as our near term target. So about 100 pips or so from current market price. All right, so let's move over to euro dollar. And, you know, very similar price action here for euro dollar. We're just consolidating really between this low and this high. Okay, so we've got a low here and a high here, and the market's just bouncing back and forth in here. And of course there are intraday trades and things like that that we can find within this. Now, the likelihood of them being high probability is just slim because the market isn't, technically trending. Now, that doesn't mean that there isn't going to be, any trades or anything for us to take action on, because I definitely think there will be. Just based on what the market's doing in here, you have to really make sure whenever you're executing any type of trade, this week and going into the remainder couple weeks left in the year, you want to make sure that you're framing all of this stuff off of a higher time frame. So whether that be, higher time frame support or resistance, that's what you're going to want to operate as, as basically your entry point or, your confirmation level. So where the market will, once it gets to that point, is it confirming to you that it's going to go higher or lower? If so, then that gives you the opportunity to trade it. If not, then you just have to wait for the market to get to another logical level. So, based on what they're doing in here, again, by me thinking that dollar index is going to continue higher, that automatically puts me on a bearish standpoint for euro dollar. So I'm not bullish this market yet. I am still bearish. Now, when we do gain some traction and want to head higher, and this is much longer term, I do believe the liquidity that they've got built up above this 1750 to 18 big figure levels back here will be traded to relatively quickly. But this is, again, much longer term. But once we get out of the consolidation, so meaning above this high here, it would be logical for them to start trading to these levels, in a relatively fast pace. So I'm not saying that'll happen in 2 days, but over the course of 2 weeks, maybe 3 weeks, maybe even a month, we could easily see them get back above 18 big figure if this market is in fact going to go higher. But I don't have that confirmation of that yet, so I'm still overall bearish this market, because if you look higher time frame, we've got bearish trend. Okay, so there's no reason for me to be bullish unless we can get some type of daily break in market structure of some sort. Okay, and that would have to be the market forming a higher high. But even in the price action we've got here, we've got high, low, lower high, lower low, down here, lower high, and next target would be another lower low at the 1260 level. And if we can get the strength, get below 1.1220 to 1.12 big figure. Okay, which will be relatively in line with our objectives on dollar index as targets for the upside. So again, the main thing that you want to focus on for euro dollar in here is whether or not we start trading higher. Now, the confirmation will be once we get above the 1450 to 1470 level here, so this high, so the high of November 20th. So if we get back above that, then we have to consider that this market may want to go higher. But if we're just kind of hanging around in here, it's going to be relatively similar price action as dollar index, I would assume, meaning we're probably going to consolidate or they're going to start trading lower. So I'm not bullish until we can actually get above the 1450 to 1470 level, and then we get that confirmation, and from there we could potentially be looking for potential buy or buying opportunities on euro dollar. But as of now, I'm still remaining bearish, and I'll be focusing on selling opportunities as long as price action lines up on the lower time frames. So in terms of the weekly objectives, again, first target will be this 1270 to 1260. Scale some partial profits once we get down here. Scale some before they clean out the low. Scale some at the low as they go a couple pips below the low, 10 pips or so. And longer term, you can have your target set here at the 1220 level. Okay. So let's move on to GBP USD now. Now this one here, in my opinion, looks like it's going to be quicker to get moving than euro dollar. So we've been mainly focused on euro dollar. euro dollar, has been performing well for us in terms of any trades that we've taken. But for GBP USD, we've been in a really ugly consolidation, right? But if you look, yesterday's trading, so for Monday, December 3rd, well, that's technically today's trading, but the daily candle closed. But all right, anyways, for December 3rd, the daily candle, you can see that the market came down, and we've pretty much got equal lows now. So the low here forms at 26.98, and then we've got the low here that forms at 26.95. So about 3 pips off, but they're relatively equal lows. So in my opinion, I don't think this market will really start trading higher. We should see continued acceleration to the downside for GBP USD below 27 big figure, so about 20 pips from current market price. And from there, I'd like to see the 2660 to 2650 level, as we've been mentioning since last week or so. Well, we mentioned it in last week, but it's been a target now for a little while. Since we've been trapped in the consolidation and haven't really been moving anywhere, there hasn't been any opportunity for me to be a trader on this. But the fact that we've come down, left equal lows, and this is just classic for them to do. They're getting everybody to think that it's going to go higher now. And while we can have, maybe one bullish day or something like that, I wouldn't technically expect that. But overall, when they leave levels like this so close and not blown through, what I'll be looking for now is a continuation lower with a big bearish candle. So see how this candle is a big bearish candle, and it's a lot bigger than most of the other candles, but you can see the acceleration it had, and it probably won't be that big. Maybe it will, I'm not sure, but relatively I want to see a big bearish candle. I don't want to just see them come down and wick through it. I want to see a nice big bearish candle closing. It would be nice if they could close below really the 2650 level. So I want to be a seller and potentially capitalize on this pair here, and ideally get out at around the 2650 level, which would hopefully, if I can get on it at 27 big figure, that'll give me about 50 pips or so. So I'm my goal really for the week right now is about 50 pips a week. That's ideal. Obviously, if I do more, that's great, but if I do even 20-30 pips for the week, I'm happy with that as well. But ideally, I kind of have a goal for myself. I want to have at least 50 pips for the week, each week at least, closing out the year. And this seems like the most logical setup to me right now. Once we go into Euro GBP in a second, you'll understand more as to why. But this pair it's been consolidating so long now. I don't see why they would, want to take it back up or anything like that. I think they're just gonna kind of get that continued acceleration to the downside. One thing to watch out for though is we could see something, kind of like yesterday. So you see how the market opened here, and then we came all the way up, had this big long wick. So the market opened at 27.65, and the high formed at 28.24. So that in itself was 60 pips. Okay, so the market rallied 60 pips, and by the market doing that, it's trapping any types of buyers or anything that are trying to get long on Eurodollar. So any retail traders or anybody that's uninformed about what the market's actually doing, they're going to be buying GBP USD, which I think I might have said Eurodollar earlier. But yeah, GBP USD, this is the pair we're talking about. The fact that they pushed up 60 pips since the daily open, that's trapping a lot of people to get long this market, especially with them looking at potential double bottom formations and things like that as strong support. With them being uninformed, they're probably buying this market. So I'm not looking for what they're looking for. I'm looking to basically offset what they're thinking. So if they think that this is a double bottom and it's true support, I'm looking for the market to trade through it, because I know that they're buying there, which means there's money there, which means the market will likely go there to take that money. Real simple. So I wouldn't be surprised if we do see another, so like the market open here, we can rally up all the way into Asia, all the way through London, and then completely reverse, potentially say they come back up to 28 big figure, say they come all the way back up 80 pips, and then they just sink it, right, for another 80 pips or 100 pips or so. They can easily do that with cable or GBP USD. Cable is just the nickname for it. So, I advise you to use caution. If you're not in the premium group and you're trying to like trade this on your own and you're not experienced or anything like that, be cautious of the fact that there could be another, relatively large spike up and then they sink it. And the reason I say that is because they're in a consolidation. Look at most of these daily candles, right? Typically, they're looking to trap uninformed traders or retail traders the opposite direction of the intended day. Okay, so you see here the market opens 29.84, high forms at 30.30, so we have a 45 pip rally, and then the market sinks for 29.84 to 27.68. So like what is that, 200 pips? This was that big day. Yeah, 200 pips for the body of the candle. Okay, so you don't want to get trapped on being a buyer by this 45 pip move up. So you have to obviously stay away from the lower time frames because you can really get caught up by doing that. And that's why it's so important to already have your daily perspective. So just to kind of give you guys an idea of what I'll be looking for with this is if we do get, the things that I'm talking about, if that does unfold with this pair, what I'll be looking for is Asia to London session tonight. I want to see them form some type of high. That high should form at some level of key resistance, right? So once the market actually excuse me. Once the market actually, quote unquote tops out, right, or fails to go any higher, we should see acceleration to the downside, moving below 27 big figure, potentially down to 2650. Now, personally, I don't want to see them come back above yesterday's high. So if you notice, yesterday's high formed at 28.24, and think about what they can do, and think about what happens near the big figure levels, 28 big figure. They can easily rally the market up, have some type of quote unquote topping formation, or inability I'm so stupid, inability to go higher. If that's the case, then I'd be looking for weakness from there. So you're going to be looking for a confirmation of the market to make lower lows, lower highs on a intraday chart. So hourly, 15 minute, 30 minute, whatever you're comfortable with, whatever you prefer looking at, that will be the chart you're looking for, the confirmation of the breakdown. So the market to form the lower lows and lower highs. Again, we do not want to see them go back above 28.24, which is yesterday's daily high. So good practice would be take a trend line, whatever color of your choice, and have the level 28.24 on your chart. That way you know if they get above that, they could either consolidate or continue pushing a little higher. That's not what we would expect, but we have to anticipate that if they get back above the high. So as long as they remain below it, and also the 28 big figure is below it, they can. It would make more sense if they came back up to that, form the high, and started trading lower. They don't have to. Okay, so they can just start selling off immediately, and they don't have to trade higher at all. Now, regardless of what happens, you can go on an intraday time frame, 15 minute, 30 minute, hourly chart, and find the setup or the confirmation that you're looking for and still be able to capture part of the move. Because we're talking about down to 2660 from where we're at now is 80 pips. There will be an opportunity for you to capitalize on, a minimum of 20 pips within that move. So it's not about catching the high or anything like that. So don't get caught up trying to enter, as the market forms the high. I never even try to do that. I wait for the market to find resistance or hit support, and once that happens, I wait for the confirmation, meaning I wait for the market to prove to me it's going higher or prove to me it's going lower. Once I get that, then I find where I'm going to enter at. In terms of like candle, I already know the levels I'm looking to enter at. And you should all know the levels that you're looking to enter at as well. That's part of having a plan before you're going into any specific trade. Alright, so just to kind of wrap this up, GBP USD looking for lower prices to 27 big figure down to 2660, 2650s. And we do not want to see them get back above 28.24, which is yesterday's daily high. So let's move on to Euro GBP, and this is kind of the reason here that I'm leaning more towards being a seller this week on GBP USD than Euro dollar. And you can see that yesterday we had a relatively bullish day for Euro GBP, and the fact that we've kind of carved out that low that we were talking about here and we started to trade higher, looks to me like we're going to start running some liquidity above the market. 89.40s, 89.50s, 90 big figure back here if we can gain the strength, 90.50s. So we've got liquidity built up above the market, and the fact that we're gaining some strength here, or what looks like to be strength, if they do in fact start trading higher, that will mean a stronger euro over the British pound. So in terms of relating that back to the charts we just covered, Euro USD and GBP USD, if Euro dollar is going to be stronger, then that pair in itself could do two things. It could go against the dollar index and trade higher if the dollar index continues trading higher. Because if the dollar index trades higher, we should expect weaker Euro USD, because dollar index is the second currency pair. It's going to move inverse of that particular currency. So when we look at Euro USD after analyzing this chart, and we know that Euro is going to be stronger than GBP, the likelihood of Euro dollar going against the dollar index and trading higher, in my opinion, is unlikely. So what that, an alternative to that is Euro dollar could go into a consolidation, while GBP USD is allowed to fall lower. So if this market trades higher, again, that means stronger euro, weaker British pound. So then if dollar index trades higher, that means in itself weaker foreign currency. Euro, GBP, all that. Canadian dollar, Japanese yen, all of it. It should be weaker to the dollar, but you have to obviously analyze based on the format of the currency. Is the dollar index the first currency in the pair, or is it the second? Based on that information, will tell you whether or not it's going to be correlated to the dollar index, or it's going to be inversely correlated to the dollar index. So for Euro GBP, the fact that we're potentially going to continue pushing higher, that will allow me to believe that GBP USD can now fall lower. And hopefully I didn't make this sound like too complicated for you guys. I try to explain it every time I talk about this, but Euro GBP is a big key in determining the directional analysis for me for Euro USD and GBP USD. So this is kind of what gives me like the insights as to which one I would prefer to be trading during the week. Okay, sometimes I trade both, but it's very rare that I do. The markets really have to be trending for me to do that. Otherwise, I'll just kind of act on one. And that just allows me to kind of like keep my, stay in my lane. Don't try to get like too greedy or anything. And no, that's just like what works for me. You guys can, obviously trade both if you want. But for me, I'm leaning more towards being a seller of GBP USD this week based on the fact that this does look like it could potentially trade higher. as well as dollar index lines up with, you know, the potential outline for GBP USD. And you know, just looking at the charts alone for Euro USD in comparison to GBP USD looks like it has more room on the downside to go, right? Because if we compare the two really quickly, and then I'm going to move on. If we compare the two, notice what we got here. Okay, if you look on both screens, we've got euro dollar on the left, GBP USD on the right. The dotted line is showing the August 15th, 2018 low. If you scroll over to here, November 12th, on euro dollar, we formed, again, euro dollar is the left chart, we formed a lower low, clearing out the liquidity below the August 15th low. GBP USD was unable to clear out the low on August 15th. It came down and then it pushed all the way back up. Then it's come all the way back down, pushed back up, came all the way back down, and now we've got equal lows here. So based on the analysis we've just done with Euro GBP, this pair on the right, GBP USD, looks much weaker to me because we've yet to clear out the liquidity below these lows. So with the end of the year approaching, GBP USD makes the most sense to me to be short or be otherwise a seller looking for 2650 to 2660 as like my kind of like near-term target, because we have not taken out the low that formed here on August 15th, which is also the 2018 low of the year. So all that means is this is the lowest low point of the whole 2018 trading year. So anyone that has been buying GBP USD since August 15th, or anyone who's been buying it since back here and they added more positions here, their stop losses are resting below here and also here. So all the market has to do is just one quick swipe through that, it clears their orders out. So this one here on the right, GBP USD, looks much clearer in terms of a selling opportunity to me for this week's trading. So let's move on now. That was a little longer than I wanted to talk about all that, but sometimes it happens. I go into little talking rants for these videos, so hope you guys are cool with that, and you know, I appreciate you bearing with me. So dollar yen, obviously we're still looking for that 114.50 level, but similar to the other pairs we've analyzed so far, we're in a consolidation. We don't have much really going on. You know, if you look at the daily candles here, they've been really small bodied, which is, you know, in my opinion, due for some large up candles and, you know, or large bullish candles, which we, in my opinion, we should see soon. So I'll be looking, you know, this week for dollar yen to continue trading higher, 114.50 as my longer term target, about 90 or so pips from where we're at now. But we've got this 114.20 level, which is the most recent high. So I'll be looking for that to be cleared out, and then from there we're looking for 114.50 because we've got all this liquidity built up here. And then we've got some liquidity built up below these, above these equal highs here at the 115.50s, which can be a target, but we have to really get above these levels here first. So, you know, what is this? May. Yeah, so this is, again, just like GBP USD. It's the highest high point of 2018. So, again, anyone who's selling dollar yen based on the analysis that, you know, this is strong resistance and the market is topping out or whatever they believe in, they've got their stop loss resting above here, right? The red X is their stop loss. The market is going to look to clear them out because it's not going to allow them to stay in. If the market does want to push lower, it's going to clear them out first. Okay? It's not just going to automatically let them win and anyone who's been selling it on each touch of this quote unquote true resistance, they're not going to allow them to see all the profit if they are going to start trading lower for taking out some lower liquidity down here. So I don't see them trading lower as a potential scenario at all right now. I'm overall, bullish this market, and 114.50 is my minimum target for the upside. So, it could definitely continue much higher, longer term above these equal highs. We've got a lot of liquidity built up above this market. So, it's really dependent on, when we get above this 114.50 level. And, from there, I believe, catching a potential swing trade or something like that, targeting the 118s or something like that, about 400 pips or so, that will present itself, once we get above the 114.50s. But as long as we're below that, any type of intraday trades, buy setups, targeting higher liquidity, that would be kind of my go-to setup. Yeah, I still have a super small position on my swing trade for this that I entered at, let me see what my entry is. 112.51. 112.51. Okay, so it's about right here. So it was on the test here. So once the market, continued to push higher and things like that, I've closed out, pretty much 98% of the trade. I have like a super small position on, obviously with my stop loss 60 pips or so in profit. So really nothing to be too concerned about for me in terms of getting stopped out or anything for this. I wouldn't recommend trying to take a swing trade right now and targeting 114.50 just based on where we're currently at. I would wait for more clarity, another higher high to form or something like that. But overall, I think once we get above 114.50, there will be another opportunity for a potential swing trade, again, potentially clearing out these highs. And for that, those of you in the premium group will be made aware, and that will kind of be a much longer term swing trade that could pan out over the course of 1, maybe 2 months. And that'll be a pretty cool little experiment too. So that will be something that I'm looking into once we get above that, but I do have a small position still on targeting that from down here. So that is pretty much everything for dollar yen. In terms of short-term targets, we've got 114 big figure, so that's about 40 pips from current market price. That's what I'll be looking for today or tomorrow's trading, Tuesday. Can we get above 114 big figure? Or are they going to trade a bit lower before continuing higher? So I'm just kind of waiting on that information for this. Australian dollar, we have poked our head above. Market actually gapped up here on Sunday's open, and we have poked our head above the liquidity here at the 73.80 level. So this one, a lot of people can, it's pretty clear to see the fact that we've got, something going on in here. We've got a low down here, and the market's, gaining some nice strength here. We're gapping up. It'll be interesting to see if this can continue higher. If that is the case, we do have liquidity resting above the 74.50s, potentially 75 big figure. So that's something I'll be looking at for this pair particularly, but it doesn't really line up with my dollar index analysis at the moment, so it's not something I'll be participating in, but I'm interested to see whether or not they're going to continue trading higher for the liquidity above here, or whether or not this is just a run on liquidity and they'll bring it back down into consolidation in the range. So those are pretty much the two scenarios I'm looking for this. But again, you know, not really something that I'm participating in terms of like trades or anything. And same thing for New Zealand dollar, right? You know, this thing, obviously, you can't really deny the fact that we've got extremely large bullish candles going on here. We're gapping up. It looks, you know, pretty clear to me that they're targeting the 70.50 level up here. So 0.70 big figure up to 0.7050. You know, about 100 and, what is that, 80 pips or so? Oh no, I'm off. 140 pips or so from like current market price. So, you know, that could be a nice little buying opportunity. Again, it doesn't align with my dollar index analysis, so it's not something I can personally trade. It doesn't align with my plan, but you know, everyone's plan is different. Everyone's a different trader. If this is something that's super clear to you guys and you take it as a buy, and target the 0.70 to 0.7050 level, you know, regardless of if you have a successful trade or unsuccessful trade, it'll be a learning experience nonetheless. You know, obviously, if you have a successful trade, that will, you know, kind of teach you the benefits of like having your own, well, not technically your own analysis, because I'm basically like giving you the foundation, but you know, taking action on your own and kind of being like an independent thinker in terms of like going against the grain, things like that. So, you know, that will happen if you have a successful trade. And if you have an unsuccessful trade, then, you know, you're able to kind of dissect that and figure out like, why were you thinking that it was going to go higher? What convinced you to actually take a trade on that? You know, was it following your plan? And, you know, did you stick to all your rules, all that stuff? And, you know, from that, you're able to grow nonetheless, whether you're right or wrong. So I don't think it's a bad experience to do things like that. You know, just because I think something's going to happen or I say I'm not going to do something does not by any means mean that you guys have to do the same thing, or not do the same thing, right? Do what suits you. Sorry, guys. Mild little throat tickle. So, for New Zealand dollar, you know, what the technicals look like to me is it's obviously showing strength. So, I'm going to be, you know, observing it. Again, not participating, just observing. I want to see whether or not they can get above this 70 big figure to 70.50. All right, and to close out the session, guys, we've got dollar CAD, and for this one, I don't really have a convincing opinion about anything particular. I mean, we've cleared out some liquidity that we've had marked out here at 132.20 and also 1.33 big figure. We've got some resting liquidity back above here at 33.80, 1.3380. And if you look, this high that formed came in at 33.60, so just about 20 pips or so shy of that. Now, obviously, with our bullish bias on dollar index, we should be looking for strength in dollar CAD. Again, though, you know, similar to a few of the other pairs we mentioned, we could see this one consolidate, right? It's clear that we're in an underlying bullish trend, right? It's obvious, but the fact that we were really unable to continue higher here, like they closed above it and then they came all the way back down, came all the way back up, wicked through it a few times. It's not too convincing to me that they want to go higher at this moment. That does not mean that I don't think they're, you know, that they're not going to continue higher, because overall my bias is still bullish. You know, I'm not bearish until we can start really breaking down and making some lower lows. If that is the case, then real simple, we just switch our bias to bearish. And, you know, just a quick little topic, like for those of you that struggle on finding, you know, the direction of the market or anything like that, you know, it's super simple, guys. Like, really don't even overcomplicate it at all. Like, is the market making higher highs and higher lows, or is it making lower highs and lower lows? And that does not mean like just looking at, like, scrolling out and looking at this, right? You're not trying to look at all this. That's too much data or information to sit there and analyze. But if you're working with like kind of like the course of, you know, what's been going on the past year, you know, maybe 2 years, depending on like what works for you the best. But I usually stick with about a year or so. And, you know, you can see like here we've got May's low, April's low, what is this? January's low. Okay, so perfect. You know, what I would stick to in terms of what trend, you know, or what is the underlying directional bias is go back out like to the beginning of the year. Okay, we've got January right here, or in here, and then we've got February. Market forms a low. Okay, scroll out a little bit more, you can see the market had a previous low. Alright, before that we were trading lower. Okay, so at this point the market had some type of reversal. Trades all the way up, breaks market structure, comes back down here, forming a low, and then we start making higher highs and higher lows. Okay, so by coming back out to the beginning of the year, you can clearly see for the year we've been in a bullish trend. So there's no reason for us to switch to a bearish trend until we had some type of confirmation that this market wants to go lower, aka forming a lower low. Until that happens, there's no confirmation of this market wanting to go lower. So there's no reason to get so caught up with your, you know, directional bias, whether you should be buying or selling, or is the market bullish, is the market bearish. Just simply go out to the beginning of the year and figure out, is the market forming higher highs and higher lows, or lower lows and lower highs. Whichever of the two, from there, you know, start diving deeper into price action. Break down smaller portions of price. Go out to the beginning of November, and then you could see, okay, we've got November here. What has the market been doing since the beginning of November? Low, high, higher, higher low, higher high, higher low, higher high. Okay, so we're here now. The market hasn't broken below this low. This could be a potential higher low point, and we could see the market start trading higher. Right, so you want to like formulate ideas like this. You don't like just starting with the beginning of the year. You're not going to do that every single day, right? Because not much is going to change. You're going to know that you're still in a bullish trend for dollar CAD. You're going to know that it hasn't switched yet unless we've just had, you know, some type of like explosive move to the downside. Okay, now if that's the case, then you can start factoring in other ideas. But up until that happens, you have to be thinking that the market's going to go higher, and on a lower time frame, intraday basis, you're looking for potential, you know, opportunities to be a buyer based off of that higher time frame analysis. So that's kind of just like a little quick lesson on like directional analysis, but it's super important because, you know, a lot of times people get caught up on these like moving averages and indicators and all that stuff to kind of determine the trend, and it's, trust me when I say it's really not at all necessary. You know, there are a few that could assist. By all means, you know, none of them give you, in my opinion, the type of clarity that just pure raw price action does, because the indicators and things like that are a bit skewed and not always, you know, perfect. But that's a, you know, kind of a topic for another day. But look at the market, look at the context of the past month, the past year, past week, past day. What was the market doing? You know, you can even go on an hourly basis. Was the market forming higher highs or higher lows? Right? Was it going up? Was it going down? Clearly, yesterday for dollar CAD, we had a bearish day. But did we come and like break below any type of significant low or anything? No, we haven't. We've broken below this low, but that could be some sort of an indication, maybe. But in my opinion, I'd be looking for like some strength to get below this low, but ultimately really get below the 1.30 big figure level, which will be more convincing to me that they're going to want to go lower. But really, until that happens, we could just consolidate back and forth. There's no reason, you know, we're going into the end of the year. They don't have to have an explosive move up. They could very well just consolidate in here, rounding out the end of the year, and then call it a day. Or call it a year. So that's really it, guys. Not too much else for us to talk about. I'm going to go ahead and wrap up the video here. If you guys have any questions or anything, or like concerns, anything that you're confused about in the charts, drop a comment. below the video on the side of the video if you're watching on Facebook. But I want you guys to really engage with me, ask me any type of questions you have. Like, I can only kind of, I guess, talk so much about certain things, and without feedback from you guys on like what you may be struggling with and things like that, I can't really help. So I definitely would love for you guys to comment below the video or reach out on Instagram or Facebook or Twitter. All of that stuff is at Jrod4x. And just engage with me, communicate, ask me any questions about Forex or anything that you're concerned about. I'd be more than happy to talk to you guys, and I look forward to hearing from any of you that reach out. And that's really it for today's video, guys. Hope you enjoyed it. Much longer than last week's video. Wanted to give you guys a little bit more in-depth kind of what I'm looking for. Hope you enjoyed that. But that's it for today, guys. I will talk to you in the next video. Have a good rest of your day, because it's not the weekend anymore, and have a good week.